Hello everyone, in this video we will talk about Chargepoint, where the company stands, if you should buy its shares, and what are my price predictions. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel. Chargepoint is a company that manufactures and manages networks of charging stations for electric and plug-in hybrid vehicles. It is a company that is well positioned for the future trends because it is betting on the increase of low or zero emission vehicles on the road for the decades to come, which is a trend that is happening at this moment. So if you believe in the electric vehicles regardless of the manufacturer, Chargepoint will be a major winner of this trend regardless of which company will dominate this industry. When we look at the 1-hour chart, we see that the price is now sitting at $42.24 in a continuation of the bullish trend the company has been having since November of 2020. The support levels have been gradually rising, and each peak has been higher than the previous one as well. When we look at the previous highs, they form a perfect line between $42, $45, and $48. The next peak may very well reach above $50 before entering in another correction. The Chargepoint stock price is highly correlated with the latest developments and the interests investors have in the EV sector. More specifically, the annual number of EV vehicles on the road can be a major catalyst for the stock to go higher. Because the EV sector is currently still in its early stages, it is reasonable to assume that the total number of electric vehicles will grow in the future for the many years to come. The value of the stock will increase based on this growth, regardless of the car manufacturer. When we look at the options market, we can see that there seems to be a lot of demand and interest for both the call and put options. A call option allows you to buy a share at a strike price, especially when the price of the underlying share goes up. A put option allows you to sell a share at a strike price, especially when a price of the underlying share is expected to go down. In terms of the absolute number of contracts traded, there are more calls option bought than the number of put options traded, but we can see that the cost of the call options have increased significantly compared to the cost of a put option. So what the options market tells us is that the market is expecting a lot of volatility for the stock in the month to come in both directions. Investors have reached an overall consensus that the price will go higher and will probably reach $50 within the next 2 months. My prediction is that the stock will reach $50 within the next few weeks and will probably reach $60 or $70 within the next 3 months. My recommendation for the stock is to buy the shares at the current prices because it seems to be in the middle of a bullish run. For those who want to keep the shares in the long term, it is recommended to gradually build up the position over the next 4 to 8 weeks. Wait for the price to pull back and to increase the holding when that happens. The position should be gradually bought and sold periodically as well, so that when the stock is near support or resistance levels, the profit can be gradually locked in as the price action evolves. Given that the company has an established product and a fairly large customer base, I would suggest that the position can be up to 10% of your portfolio. Thank you very much for watching. If you like my content and would like to see more analysis videos, please like, comment, and subscribe to my channel.